Stocks on Monday officially entered a bear market. That's when the S&P 500 dropped 4%.
Western Mass News spoke with a local financial advisor to learn what a bear market is and what it means for your money.
Yeah, there are two animals on Wall Street that get a lot of attention, bulls and bears.
Like a bull charging ahead, a bull market signifies share prices rising, encouraging buying. A bear market is quite the opposite.
And bears hibernate, so bear markets are thought of as markets kind of retreating a little bit.
Matt Farkas with St. Germain Investments in Springfield tells Western Mass News the stock market's tumble has put the S&P 500 into a bear market, the term for when stocks decline at least 20% from their most recent high. He says there have been 14 bear markets since World War II, which gives us some perspective.
So on average, it's about once every 5 years. And the average drawdown, or that from peak to trough, is about 30%. We're down, about a little over 20% today. And so that certainly indicates to us that the worst is likely over.
It's the result of Wall Street grappling with the impact of the war in Ukraine and the Fed raising interest rates to try to combat inflation at a 40-year high.
I think it's affecting me very effectively.
Felicia Harvey uses the app Robinhood to invest and has seen the volatility in her stocks.
The stock fell and then it rose back and then it fell more and more.
Farkas says this comes as investors reconsider the prices they're willing to pay for stocks.
Volatility tends to come in clusters, so volatility tends to lead to more volatility, and we're going through a period of that right now.
Bottom line, Farkas says you should keep the long-term goal in mind.
If you need the money, that's a different situation.
Although he says you should keep an emergency fund, sometimes that runs dry.
If you have a big purchase and you know you're going to need those funds in the next 6 months, a year, I'd say even out to 2 years, you may want to make some changes.
But if you can afford it, it generally pays off to keep your investments where they are.
The price for long-term growth is having to deal with some uncomfortable times.
Stocks continued to slip today. At close, the S&P 500 was down another 14 points. The Dow closed more than 150 points.